financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you aboard for today's podcast. My name is Jerry Robinson, as you heard at the outset. Grateful to have you here. I'm your host, your guide, leading you on an excursion to truth right here on our podcast. Each time we have the opportunity to get together, which is going to be many, many times throughout the year 2019. Looking forward to seeing you over and over again. We have so many very good podcasts lined up in 2019, many guest interviews, including today. We're going to be joined by our good friend Tom Cloud. We're going to be talking about, as the title of today's podcast suggests, what millennials don't get about gold. It should be a fairly eye-opening interview and topic today. I'm also joined by my lovely wife, Jennifer. Great to have you on the podcast today.
It's good to be here. This podcast today is a classic Follow the Money podcast because it's all about education and opening your eyes to things that you may not have ever heard, but that is so relevant to you and your finances and your life. And so I love today's show. I think you're going to like it too. Before we move any further, I do want to make one quick announcement for those people who are just itching to get one of our membership plans, and you've been looking at it for a long time, you've been wanting to try it out, or maybe you've been a member in the past and you had to put it on pause, maybe due to whatever the circumstances were. We have a great special this month, and it is 25% off any of our membership plans for as long as you keep the plan. So that means every month you'll keep getting that 25% discount off of the regular price. And just go to the website, followthemoney.com, pick one of the plans and use coupon code SAVE25, SAVE25, and you'll get that amazing discount special. It's limited time this month, so go ahead over and use that coupon code.
That's a great special we're running, and we're also excited about the upcoming Follow the Money Summit that's scheduled for May 31st in Rogers, Arkansas, right there in the northwest corner of Arkansas. Many people say, well, why would you hold your summit there? Well, that's exactly where we're based. We're based in northwest Arkansas, and you may not know this, but that's also where Walmart is based, so it's not quite, a land of teepees and, and just a land that doesn't have much going on. In fact, it's a very growing city. This whole area, by the way, has a lot of, what you would call new money. It's quite an eye-opening place. And also a great place to invest in real estate. So regardless, we're looking forward to that. May 31st, mark your calendars. We'll have more information about how you can register for that coming up very soon. So today we're talking about what millennials don't get about gold. And as Jennifer had mentioned, it's really just about education. That's really what all this stems from. Many of you know that I wrote a book called Bankruptcy of Our Nation. And this book has become such a foundational book for the education of so many. I mean, our heart, our passion here is not stocks, right? It's not ETFs. It's not even gold or cryptocurrencies. None of those things are our passion. Here at Follow the Money, what drives us, what gets us up in the morning, what keeps us going for the purpose of this business is to educate people. We love educating people. I have had the opportunity to travel all around the world, literally, and teaching people on the concepts of the most basic concepts of what money really is. It's one of these things that we find that most people just never learn in school. Jennifer and I both have university educations. We both studied money at the university level for many years. And both of us didn't, neither one of us, and Jennifer, I know I'm speaking for you too, neither one of us learned what we learned once we got out of the university, because they don't teach you what you really need to understand at the university level. And today's show is really focused upon educating millennials. And that, how do you define millennial? Well, today, the most basic, definition of a millennial is someone who is aged between 18 and 34. That's as of this, this beginning of the year in 2019. And you think about those who are 18 to 34 right now that and almost all of them have grown up with the internet, or they have known about the internet. Most of them have had access to cell phones, maybe even smartphones, iPads, tablets. They've had access to technologies that, those of us who are not millennials, we grew up without those things. I remember growing up without, smartphones or iPads. I remember growing up without the internet. I remember having to go look in a dictionary to look up a word, or I remember having to go and look in the encyclopedia or having to go to the library. We live in a world now where the young don't have to really leave the house to get information. But the problem is that we can have so much information at our fingertips and still not fully understand what's really going on. Also, when we take a look at millennials, we see that they're increasingly driving new trends in our economy. They're saving more money than their parents. They really are. In fact, it's led some financial media sites to really label millennials as one of the most financially savvy generations to come along in some time. We also notice that millennials are less apt to go out and spend money on brand new cars or on homes even. They're increasingly renting, or they're increasingly, choosing to stay at home with their parents and, kind of save money that way. They're also much more likely to shop online than their parents. Even though their parents are increasingly beginning to shop online, we're seeing, millennials largely do that kind of as a default. And they also are much more likely to purchase cryptocurrencies than their parents. I mean, that's certainly something that we have seen as well. There seems to be an increasing adoption of cryptocurrencies among millennials that we just don't see in other generations. Think about it also, millennials saw their parents suffer massive losses in the 2008 crash. And so there is a resistance, I think, among millennials for traditional investments. They lived through the worst meltdown. They saw their parents suffer many times, the worst meltdown since the Great Depression. And so they tend to avoid traditional investments, because of that. And then you think also about, the fact that interest rates over the last decade have practically been zero. So, again, millennials are getting their whole financial education in this really kind of an anomaly where we have interest rates at practically zero. I mean, they're really kind of getting exposed to a different kind of economy than their parents or grandparents ever saw. And Jennifer, I know you receive a lot of our questions that come in. You see a lot more of them than I do that come into the website. You can go to followthemoney.com/contact, and we receive a lot of questions. And I know you receive many questions from millennials. One of the things I've learned from talking to millennials is that they do seem to know that Social Security is kind of a false promise for them. They know that it's very unlikely that the government is going to have, enough money to be able to pay them the promised amount that, that they seem to see on paper. So certainly millennials seem to understand that the government is probably, the promises the government is making are probably not going to be able to be backed up. I mean, that's certainly something that we've seen. And if you take a look at the sheer total amount of government debt that Washington has, it makes the future promises increasingly unsustainable, and quite frankly, I think impossible in the long term.
That's right, Jerry. And I know our guest that's coming on in just a few minutes, Tom Cloud, that's one thing he really likes to educate young and old people alike about is the massive debt problem that is in our society, in the government, and in people's personal lives. And you can go to usdebtclock.org to look at the massive numbers that are just increasing at such a rapid rate of government debt. And if you've never seen that before, that's an education in and of itself, I think, just by looking at those debt numbers.
It's true. I mean, the debts are sky high. It's not just government debt. It's consumer debt. It's personal debt. I mean, across the board, business debt. We're seeing a tremendous amount of debt across the board. And, it kind of begs the question, given the fact that millennials have lived through this economic crisis, they've seen it impact their parents, and the fact that they have also seen these ultra low interest rates and really bizarre monetary system we have now, why aren't we seeing millennials buy gold and silver for that matter? Because when you think about it, gold and silver have been money throughout all of time. It's only recently that we have moved into this world where paper money is acceptable, and you don't need to have any kind of backing. It's called fiat money. We've talked about it extensively in my book, Bankruptcy of Our Nation. We give a total rundown. In fact, I would tell you what, I would even stress to you that if you do not have a sound understanding of the monetary system and you want to get up to speed really quick, the book Bankruptcy of Our Nation is a way to do it. I mean, it'll help you kind of, put legs to your understanding. It'll help you kind of apply what you're learning. And you'll learn things that you're just not going to learn in the mainstream press. You're not going to learn at the university. So why aren't millennials buying gold? Well, I think, number one, gold seems irrelevant. It's way off their radar. They don't see a whole lot of commercials about gold. And I have to admit, pretty much the mainstream press really kind of creates demand. And when the mainstream press is not promoting something, very likely you're not going to see a mass adoption of it.
The only real gold commercials that you see are those silly ones that tell you to come basically pawn it off for some quick cash.
Oh, yeah, you see that all the time. And then, of course, you see ads for collectible coins like numismatics, which, are fine if you're a collector, but if you're trying to actually get access to the exposure to physical metal, then numismatics are not going to give you the kinds of returns that you're really desiring. But, it seems irrelevant to them. It's off their radar. They don't hear their friends are buying gold. In fact, their friends are buying cryptocurrencies. Their friends are buying other things. And so gold is just kind of off the radar. Secondly, they don't know where to buy it. I mean, think about it. I mean, if you don't listen to this show, or if you don't listen to other shows that talk about gold and silver, would you really know where to go to buy it? And would you know where to go for the best prices? I mean, it's not really something that you think about very often, and most people certainly don't have any clue. Plus, there's no app for that. Yeah. Well, there may be a few apps, but they're very few and far between. I mean, very few and far between. There's certainly not enough. We mentioned cryptocurrencies. I'm certainly seeing millennials very enamored with cryptocurrencies. They know more Bitcoin millionaires than they do gold and silver millionaires. And so it seems more relevant to them. It seems like, well, this is the gold of my generation, or this is the silver of my generation. And I sincerely believe that many millennials believe that cryptocurrencies will replace gold. The old economist John Maynard Keynes, who was so unbelievably fundamental, played a huge fundamental role in our current monetary system, really called gold a barbarous relic. He simply considered it to have no real value in man's growing technological society. He taught that, really governments could increase their spending. We didn't have to rely upon the gold or the gold standard. And, this kind of thinking has really infected all of economics, and it certainly affected modern economic man. Many millennials as well are much more tech savvy than their parents, and gold and silver just seem completely like, boring investments. They're not sexy like Tesla. They're not sexy like, solar, or they're not sexy like cryptocurrencies or some new tech stock or, something like that. So it just doesn't seem to fit in, to their overall financial plan. And I think the other really big reason why millennials are not flocking to gold and silver in this debt-based world that we're in is that they just don't understand what money is. They just really don't. And you can't really blame them because, again, as I pointed out, John Maynard Keynes, we've moved away in our thinking as to what really is going on. And in fact, as we've built out this technological society, we have engendered, I think, within our own selves, we've created this belief in human progress that causes us to think, naively, of course, but causes us to think that war will never really, occur on our own turf. And if there's never going to be another war that's really going to affect us, like World War I or World War II, then why would you want to own gold, right? There's also this idea that the electric grid and all of the technological society that we built here is completely sustainable and will never suffer any kind of hiccups. And so if the lights are never going to go out, right, if there's never going to be an EMP, and if there's never going to be any kind of threat to the current system, then why would you want to own gold? And so I understand that. I mean, if you live in a world where you think that nothing is going to happen, then gold does maybe seem a little excessive. What about the food supply chain? Most people think that grocery stores make food, right? That's why they don't farm. That's why you don't see a lot of millennials farming, although a few of them do. They get into organic food and whatnot. But for the most part, farming is kind of gone by the wayside because, again, grocery stores make food, right? And so if the food supply chain is never going to get crimped or it's never going to break down, then why would you want to own gold, right? Same thing here with our government. The government can save us, right? The government can always step in and solve the problems. And so if the government can save you, why would you own gold? The Federal Reserve can always print more money, right? That's what many people believe. So if that's the case, then why should you bother with owning gold? And paper fiat currencies, they're always going to have value, right? And so since they're always going to have value, why would you want to own gold? All right? So you see the thinking that has been created by our technological society. We believe a lie. We really do. We believe the wrong thing. We don't understand mankind's history. We're living within the noxious fumes of our own arrogance. We believe that progress and human progress is inevitable. That's why the new iPhone 7 or the new iPhone 8, just wait for the new iPhone 9 or the new iPhone 10. We love that validation of man's progress. We love the new models of vehicles. We don't like the 2018 vehicle anymore. Now we like the new 2019 vehicle. It's a constant reminder to man that he is progressing, that he's moving higher. But in reality, not much has really changed. I mean, there's no doubt about it that we've learned to harness nature. But whenever things break down, we're going to find out. I just got to be honest here. I really do believe this, that when things break down, and I believe they will, I know they will because I understand history, then you're going to see that people fully grasp that gold is money, right? When the lights don't come on, people aren't going to be asking for your Bitcoin, right? They're going to be asking for the silver coin. They're going to be asking for the gold coin. They're not going to be looking for things that are intangible. They're going to be looking for real assets. And with that in mind, I want to bring our guest on, Tom Cloud, because he has a lot to say on this topic. Let's head over to that right now. Well, joining us back on the line today is our good friend Tom Cloud. Hey, we're talking about gold and silver today on the podcast, so we have to bring in our gold and silver authority, Tom Cloud. You know him well if you've listened to the Follow the Money podcast over the years. He is a veteran precious metals advisor. He has been selling gold and silver and advising clients all around the world on gold and silver prices for the last 40-plus years. He has a lot of experience in this space, and we're really interested in hearing from Tom today not only about the latest price movements in gold and silver, a good update, but we also want his take on millennials, and he certainly has talked to some over the years. They've certainly called in, but we're curious how many millennials are actually reaching out and actually digging in and looking for gold and silver to start stacking. And as I mentioned, I'm also joined by Jennifer here in this interview, so great to have her along. Tom, great to have you on the podcast today.
Well, Jerry, it's always a pleasure. You love working with people that want to educate, like you and Jennifer want to educate groups, and then certainly the people listening that are with them. I mean, their future depends on it, and yet we don't think they're getting the kind of information they need to be educating themselves on. So hopefully we can help a little bit.
Yeah, Tom, I know that you have gold and silver buying clients of all different ages, but I'm curious about what percentage of your clients would you say fall into that millennial range, like the 18 to 34 age group, and also what are their top reasons that they tell you when they're buying of why they're buying physical gold and silver?
Well, first of all, it's not a very big percentage. It's interesting in how hard it is for a millennial because of the way they grew up with computers and Amazon and quick things that they could get answers, and a lot of them think they're not going to make a mistake in the stock market because they're smart enough to get out and they'll never see a drop like my generation, and then Jennifer and Jerry's generation, and now the millennials come after that. And but the ones that do delve into it, which at this point is small, but the ones that do delve into it really get interested and have incredible questions to come in. But I think the biggest problem, Jennifer, is where they don't understand fiat money, that it's money by decree and it's nothing to back it. And the dollar has been going down for some time, and it's at some point the dollar will not be the first currency in the history of the world to survive that went off a gold-backed standard. And the other thing that shocks millennials, I find, is when you start telling them that gold and silver were the only money from the second chapter of Genesis till 1971. So, 5,000 or 6,000 years, there was no question. Everybody that lived knew that gold and silver were money, and that paper money, when it came along, was a receipt for real money. But when President Nixon closed that window in 1971, for the first time, paper money became money as a bookkeeping entry. And that right there gets their attention because I was telling you earlier, Jennifer, there's a client that calls me just about every 2 weeks. He likes to argue, but the way he educates himself is to argue where I can come back and tell him. I recently had a man bring his 3 children to St. Simon's to sit down with me to go over this very thing because they look at money as paper. And no generation, my father's generation, that if my father's living in his 90s now, and then my generation, the baby boomers, and then your generation, that there's never been a generation that didn't see huge moves in gold and silver, and certainly millennials can get in early on this move that we think has started. And but percentage-wise right now is just a lot smaller than it should be. There's not enough millennials doing their homework because at some point they're going to figure out what the central banks have figured out of the world. When you see right now, why are central banks, they're a lot smarter than we are, buying the largest amounts of gold they've ever bought? I'm talking about the Chinese, the Russian, and even the Indian central banks. So they're doing something that we don't know. We need to be following with at least part of our portfolio in that. So unfortunately right now I can't tell you the exact percentage, but it is small. I mean, it is, millennials are less than 5% of our total sales, but I do give the ones that are digging, they're digging hard and learning, and they're starting small, and they add to it as they go along. And then the other thing they got to learn to do is wrap around just asset allocation is not stocks, bonds, and cash. That's all goes up or down the same reasons. They've got to have something out there to diversify. And a lot of them can't afford real estate, so the best hard asset is gold and silver with a portion of their assets.
It sounds like to me, Tom, that what you're saying is the millennials who are calling you to buy physical gold and silver have had some sort of a deep dive in education on the topic of real money and perhaps monetary history. And so their eyes are being open to this. You know, one of the things that I have personally heard from millennials along these lines is that they are feeling cheated when it comes to their education. For example, a conversation I recently had with a 21-year-old, she mentioned how she had just been reading about what Christopher Columbus did when he came to the New World and some of the real history of Columbus Day. And she said, I can't believe I've been celebrating Columbus Day all this time, and I didn't know the real history behind it. And so I guess my question to you, Tom, is do you think that high school and college students alike have indeed been cheated when it comes to not learning anything about gold and the real history about money? And what would you like to see in a school, like let's say a high school course about gold and silver?
Well, I think we've gone all around it, is that it's history and how it's just not even in their vocabulary or understanding. This same guy I mentioned a minute ago, I said, why don't you go talk to your grandfather and see what he says? And, a later conversation, he said, my grandfather doesn't know a lot about it, but he said absolutely he grew up knowing that gold was valuable. But the education criteria to get into a high school and out there, I think it's going to have to come from the family. It's going to have to be where my generation and the ones and the parents of these people, or some good friend they make, or someone they look at as an authority that can help them, because basically the system that John Maynard Keynes says you print wealth, you don't earn it, you print it, and people are falling into it, and that's what the millennials have grown up seeing, is they look at their iPad or cell phone to see what the balance is in the checkbook, and they hit a thing and it goes down $20 and went to a movie, and that's the way they're accustomed. They don't, where's that money coming from? When are people going to quit taking a bookkeeping entry? And that's where the education system is missing. They don't show the consequences of what happens when countries go off the gold-backed standard. And once again, as I said a few minutes ago, there's never been a country in the history of civilization that survived that went off the gold standard, where paper money was used only as a receipt for real money, which was gold and silver. I mean, the millennial could start out by going to usdebtclock.org. That's usdebtclock.org, and just looking. I'm looking at it right now. It's about to hit $22 trillion of debt, and that's $66,787 per citizen, or $179,000 per taxpayer in debt. And the unfunded debts are over $72 trillion. Where is this paper money going to come from to pay these obligations we have in the future? If millennial can figure that out, they could become the wealthiest generation of real value that ever lived. Not paper value, but real value. And certainly they have the tools and the brains to do it. But I'm not going to look for the education to happen. Certainly there are colleges out there that are educating people on this, but usually they're majoring in business, and they're not getting it in the normal curriculum. And I'm not sure it'll happen. It's not a conversation I've had with a lot of people, but I have with several, and I just don't, outside of these private universities or real good business schools, are you going to see this education? They're going to have to go out and dig a little bit themselves. And that's the reason people like you and Jerry are helping to educate them to where they do get to that point in their life where they've accumulated. But I can tell you, as a guy with 4 grandchildren, my grandchildren know the value of money, what it stands for, and they know what they want to save and have their money in, because there's no way you can bet on the dollar going up. I mean, if you do, you're making a serious mistake. And as the value of the dollar goes down, precious metals go up.
You're listening to the voice of Tom Cloud. He's a veteran precious metals advisor. You can reach out to him anytime by phone, toll-free, 800-247-2812. He's a sponsor of Follow the Money. He's been here for a long time. And we personally buy our gold and silver from Tom Cloud as well, our physical gold and silver. Tom, you brought up John Maynard Keynes, and both Jennifer and I studied money at the university level. We studied that, and of course we were exposed to John Maynard Keynes. He won the day, calling gold a barbarous relic and telling us that government spending could save the world. And it certainly created a lot of debt. It certainly prevented perhaps, some breakdown in society that would obviously be required in order for the system to self-correct, just like a body has to occasionally have a cold or whatever to get rid of a virus or whatever. Occasionally the body has to do something to get rid of the things that are inside. In the same way here, we just keep putting Band-Aids on the problem because mainly of Keynesian economics. We just keep digging our hole deeper and deeper and deeper. And it's so sad. And when you were making those comments also, I was thinking about every single place I have ever spoken, Tom, whether it be a church, whether it be a university, whether it be, just a conference, there has never been a time where I have found that the majority of people knew the monetary history that I was talking about. It really is something that we're woefully ignorant of, that we don't understand. What you just said a while ago was so powerful, because you said that gold was money from the book of Genesis all the way to 1971. I don't think people understand where they are. I don't think they understand the great anomaly that we live in today, where we now live in a world that's completely paper. Now we're coming up with digital money, right? Now we're coming up with money that literally is not created out of thin air. It's just literally zeros and ones. And when the lights go out, if the lights go out, I don't think it's a question of if, it's a question of when, we're going to find out real quickly that gold and silver are perceived as money, even though guys like Keynes, called it a barbarous relic. Let's move in for a minute. I'm looking at a chart of gold right now, and we called a new uptrend on gold for all of our members back in early December, as gold prices were beginning to finally break out of kind of a long sideways grind they had been in. The 1238 area right now is massive support for gold. Right now, as I stare at the price, I'm seeing it at around 1,285, and it's softened just a little bit over the last few days because of the Fed kind of signaling this dovish tone. They certainly got spooked with the stock market falling, and so they suddenly scrambled and changed their tune real quickly to let the markets know that they're ready to accommodate. Isn't that really just bullish for gold? Even though near term it looks a little, looks like gold prices are softening in that environment. If the Fed is willing to accommodate even more when we have this much debt, isn't that just even more bullish for gold?
It is, Jerry. Just the perfect example. When you started talking a few seconds ago, gold's in there at 12.85.60. We started this conversation. Now it's at $12.91. It's just jumped $6 in a few seconds. I don't know exactly why, but the point is, a lot of it's looking at the dollar. And I mentioned something else there about the central banks earlier. There's something up big time with the central banks. Some people out of Singapore, where we are affiliated with an office, is telling us that this is the year the Chinese finally back the new yuan with gold as a partial backing. It may not be dollar for dollar, but they may back it with 30 to 50%. And at that point, the United States goes into a tumble. And the other thing the millennials are really misknown is understanding bank laws about bail-in and bail-outs, and realize their money can be taken right out of their bank account with no liability to the bank if we need a bail-in. If there is a banking crisis that could come from a power outage or a food shortage or all these items out there that could come, you could very easily see a bank crisis and a bank run. Just look what's going on in France as you and I are talking. They're talking about a bank run this coming Saturday because of the things we're talking about. but there's going to be a massive demonstration, and they're going to go in some banks and get all the people to take their money out. And you could wake up next week. One guy out of Singapore this morning is saying he thinks gold will be at $1,400 by the end of January, just based on these people getting aggressive about paper money and unable all the new banking laws that won't let you take cash out and different things. So there's a lot of things out there that are going on that show gold. But if you look at it strictly from the technical standpoint that you mentioned, you know, we show the same support where you do, but we think we're going to sell on up to 1350 pretty quickly, and we're looking for a double-digit year in gold. I just don't see any way. I mean, gold only went down 1.85% in 2018. You thought it got killed. The Dow was down 5.9, NASDAQ 4.2, and the S&P 6.5. Gold did 4 times better than any stock index. And if you'd asked a street person, they said, oh, no, gold was horrible, stocks were good. And I just read to you what happened, and that's what the millennials, a lot of them look at. And they didn't look at how bad the stock market did in 2018 compared to gold. So it's just going to be an education thing, Jerry. It's not going to happen overnight. But I think people like you and Jennifer are out there helping people. And even if you only help 5 people, that's 5 people that are going to tell other people. And that's the way we're going to educate people through that. But don't count on colleges doing courses like you and Jennifer and I would like for it to happen.
Let's get all good points. Let's move on to silver for a minute. I know many of our listeners are longtime silver stackers. They believe in the case for silver, and we won't go into all the reasons why we're bullish on silver today, but I do want to talk about it technically for a minute. It has had a really nice run into the new year. It really began to pick up right after Christmas time as the market started moving into all that volatility, and silver finally perked up. It jumped up above its 200-day moving average right before the end of the year, and it's run up, close to $16 now. And again, we're seeing a little bit of softening in it as well because of the rising optimism, I guess, about the U.S.-China talks. Also, some rising optimism that the Fed is going to be a little less aggressive in its rate hike campaigns. But, ultimately, there's some fundamentals that drive silver. As we look into 2019, Tom, what are the fundamentals that you're looking at primarily on silver?
Well, you still having solar panels and things that need, based on laws in China and California, where you build new homes, you've got to have solar panels, and that demand. We've even seen Tesla, the founder of Tesla cars, investing in solar panels and manufacturing solar panels, and it's going to continue the demand on silver. Silver is the only metal we've talked about on this show before. It's not like gold where investors, silver is still over 50% used for industrial purposes. So as long as there's growth in the world, and we know it's going to be one of the first, if not the first, element to be depleted from the Earth's crust, we're seeing estimates of anywhere between 2020 and 2024, there'll be no silver on the planet Earth. But right now, like you said, it jumps $2 from 1480 to 1380 to 1580 in about a 7-week period, and we're looking at something that's just gotten back to mining cost. In this last jump, it was below mining cost for about 3 weeks, and smart investors are pouring money into silver. But I continue to tell people that's where you stack it. You have the right word. Buy a tube of 20 every month. Spend $300-something, and just forget about it. Buy the grandkids a tube of 20 silver coins of some kind. But the big money is close, because we just found out Friday there's been 295 million ounces moved in the commodities exchange for delivery. And you can take that 2 ways. You can say, oh, my gosh, J.P. Morgan and others are getting ready to crash the silver market again. They've moved all this silver to delivery status, and So they're going to go betting on silver to go up or down. Then you have the logical one that their betting is going to go up, and they're going to use it as collateral to move the price up like they did between 2000 and 2012 over that 11.5-year period. They moved it up from $3.52 up to $48, 16 times. So are they getting ready to do that again? And certainly I don't know, and I don't care. I really don't. I just know that every time I buy silver, I'm buying it at the biggest bargain we'll ever see. It's because when it moves, as people saw back when it moved from $1.50 to $50 in 1980, and they saw it again from 2000, 2012, moving from 3-something to over 48. The biggest move is the one coming. The biggest move is the one that's already started. The biggest move is going to go well above 50. I'm not going to get into numbers. But let me give you one last comment on that. I'm still looking at usdebtclock.org. And if you go over, the government in this thing has to have on there, silver right now is worth, paper to silver is 191 times, should be $191 if it was going up at the rate they were printing money. Unfortunately, nothing's gone up at the rate they printed money except debt. But gold right now is at $4,798 per ounce just since this crazy thing where they took us off a gold standard and they could print money. So even though gold has gone from $32 to nearly $1,300 and has been the number one investment since 1971, it still has not gone up as much as the paper they've printed over it. Once again, gold would be $4,798 per ounce. So people just have to realize that, going back to silver, that they're getting it at an incredibly low price, and they need to be buying it up as quick as they can afford it, because I have no doubt in my mind when it goes above $20, and I think it'll happen this year, there'll be volatility, but the trend is going to be massive up, straight up.
I really like what you said about maybe gifting a roll of silver coins to your grandchildren or your children. I've done the same thing, and I've even taken the moment. It's a wonderful teaching moment, because when you're trying to educate people, one of the most powerful things you can do, and we do this at conferences when we speak or churches or whatever, I love to take a silver dollar and place it into somebody's hand and help them understand that unless they've ever owned silver or gold, or unless they've ever held it in their hands, that they've never actually held real money, that they've only held IOUs issued by the Federal Reserve notes. And holding silver, holding gold in your hand, wow, what a great teachable moment. I've had a great opportunity. I like to buy rolls of silver just for that purpose, just to share, just to save for those teaching moments. And so I really like that comment. And one more thing I want to squeeze in, and I know Jennifer has another question as well about IRAs. I just want to briefly talk, silver's at a 5-month high, gold's at a 6-month high, but then we have palladium, Tom, which is at a record high. Our members, we alerted them to a new long-term uptrend in palladium back in 2016. I was just looking at the performance of that. It's up over 100%, palladium, and it's even moving higher now. As China considers another stimulus program for their car market, palladium's just hot. It's just screaming. Is it still a buy here, or do you think that we're near the top?
I think we're near the top. I wouldn't be buying it because, fortunately, for an old guy that's done this 43 years, I've seen it every time between platinum and palladium. The reason I was so anxious in getting in when you and I saw the uptrend at 756. And discussed 756 per ounce, that was only 2 or 3 months ago, and then it ran up, and we gave a buy signal to all of our clients.
On platinum.
On platinum.
Yeah.
And I am buying platinum, and I've sold all my palladium because I've seen it. Because if you're a car maker, you can't make the conversion to the catalytic converter. Both platinum and palladium can be used, but they have different melting points. So what happens, you can't just change without changing the manufacturing capabilities. So what you have, and I mean, I've seen palladium go from $198 to $1,000, and from $1,000 back to $300, and now from $300 to over $1,300 as they change back and forth when people like GMC and Ford make that change. Well, the reason, Jerry, I'm not as bullish on palladium is I've seen the crash of both platinum and palladium when they change places, and right now I'm not chasing the highest level in palladium because I've seen palladium, as I said earlier, go up to 1,000 and platinum up to 2,000 when they change as car companies convert to use one or the other in there. So if people are assuming because most car companies use palladium today, I wouldn't be betting the Chinese or anybody else adjusting laws. So I would if I was holding palladium, I would sell it, and I have personally. I bought platinum. I think platinum's going to go back to 2,000 an ounce over the next few years, and palladium's going to come whenever it tops out. It may be around 1,400 is what we think, and when it does, right now it's at 1,320. But when it does top out, then I think we're going to see platinum and palladium change hands again. So the opportunity for your listeners, and especially the millennials, is to get in there right now and buy some platinum, and they come in bars or coins. The bars is what I recommend because they have lower premiums over the spot price. There's no need to hold a coin just because you like it. The platinum is the better thing is to do in bars.
Okay, so Tom, that platinum uptrend definitely was it's been major, but looking at platinum now is definitely an interesting idea. And speaking of millennials buying the metals, I just had a question come in from somebody in that age range just the other day about how they can get into a precious metals IRA. And millennials love to have options. So, when they're making their decisions on which bank to choose or which grocery store to shop at, having a menu of options is something that they really like. And even people in other age ranges definitely like that too. But when it comes to people saving for retirement in a retirement account, they don't have a lot of options. Like in an IRA, for example, you can pick paper assets, and that's about it. But you have a way through something called the self-directed IRA that millennials and anybody, for that matter, can hold physical precious metals within that retirement account. Can you explain this to maybe the listener who has never heard of this option and how holding physical metals within the IRA would work?
I sure would. In fact, it is the fastest thing going with millennials getting there. We have more calls. The ones that are calling, as I said earlier, it's not that big a percentage, but the ones that are asking this question. So what you have to do, we can be your representative and be the broker that brokers the deal and give them full disclosure on the low markups we have, but they have to have a custodian. So what they need to do is call our numbers. We said earlier, 800-247-2812, and Dan, Kathleen, or I will walk them through how to do a self-directed precious metals IRA. It's real easy to do, and then the custodian is the one that will function as the one that sends them a quarterly statement on the value, tells them, sends them a 1099 if they have to liquidate anything, tells them when they get to 70.5 how much they have to take out, different things like that. But we cannot do that. But we can do the buying and the selling and the trading of the metals when they get it. So they'll call us. We'll give them 2 or 3. I don't want to mention the custodians here on the air because we deal with quite a few. But the 2 we deal with the most, we're happy to give to the millennial that will call us. But it's a brilliant idea to get in at their age and have probably 2 huge major bull markets coming in metals, one up, and then there'll be a short down. But the age they're in, they should have a precious metals IRA, even if they're holding another kind of IRA in addition, a traditional IRA, say. So it's very simple, and there are some products that can go into a precious metals IRA, and there are others that cannot. The millennial also needs to do, just like you said, they do shopping. The fees to get in, the fees annually to get the reports, and the storage fee of the metal are two recurring expenses. So usually, if they're not starting with $15,000 or more on the rollover, it's hard for me to tell them to start one at $5,000 just because the two repeating fees, would be 4 or 5% a year just for being in there, and we don't want to tell somebody that. So, but we'd love to welcome the time to educate them, and all three of us that talk to our investors would love to talk to them about, their options further. But you're right, they are, and we have seen several open up self-directed IRAs just in the last 6 to 8 months. I can think of two in particular that already had substantial amount of money to put in there.
Fantastic, Tom. Well, in our final moments, do you have any specials or anything that's going on right now that you want to tell our folks before we close out?
Well, the specials are dwindling. They're hard to find because it is right now a seller's market. The volume has increased. I think last year it shocked everybody to see gold go down 1.5%. The stock markets went down 3 times that, and they finally, just that one event has opened a lot of them's eyes because if you'd have interviewed them, they'd have bet their life just the opposite. But it just shows it's the lack of education, like Jennifer and you were talking about, that these people don't have. They don't know the history of it like Columbus Day. They don't know the history of money, and even the history of money since 1933 when the Federal Reserve Act came in under Woodrow Wilson. So there's excellent books out there, Jerry. You and I both, and many times you've had Griffin on your show about the Federal Reserve and Jekyll Island, where I live, the next island up. So they need to educate themselves, and the millennial would love reading about that. So certainly that's recommended reading for education.
Fantastic, Tom. It's always a pleasure to have you on. Thank you so much for your time.
All right, thank you. Nice being with you.
Are you prepared for the next stock market crash? It's not too late to protect yourself and your family with Jerry Robinson's best-selling book, Bankruptcy of Our Nation, now in a new audiobook format. Whether you want to listen in the car, at the gym, or on your iPad, we've got you covered. Get the entire 300-page book in audio format for only $24.95. That's over 12 hours of Jerry Robinson's economic wisdom, financial insights, and practical money-making strategies for only $24.95. Inside this new audiobook, you'll learn 21 profitable income streams you can create both now and in retirement, along with unique tips on how to inflation-proof your investment portfolio using our own PACE philosophy, and our 5 levels of financial freedom, which is Jerry Robinson's personal blueprint for building true wealth. If your goal is to become a better investor, increase your income, or just understand what is really happening in the global economy, you cannot afford to miss out on the vital information that is jam-packed into this 12-hour audio book. Get instant access to Bankruptcy of Our Nation in audio format right now by going online to www.ftmdaily.com/bankruptcy. That's ftmdaily.com/bankruptcy. Download your copy today and get on the fast track to true wealth and a lifetime of financial security.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247 2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, friends, welcome back to the program. Again, you're listening to Follow the Money Radio. It's great to have you here. Hope you enjoyed that interview with Tom Cloud. We really do appreciate Tom, all of his wisdom, all of his insights. He shares them with us regularly. And if you're not currently seeing his YouTube video that we put up every single week, you can just go to our YouTube page, youtube.com/FTM Daily. And there you can find Tom Cloud's video update on precious metals each and every week. And if you're not currently receiving his email updates, you can do that by going to followthemoney.com / what do you think it'd be? /gold. You guessed it. Followthemoney.com / gold. And there you can sign up. Just enter your name and your email address. And whenever Tom has an alert or a news item that he thinks is worthy of sharing, you'll receive that. We don't ever spam you. We don't ever share your email address with anyone. Jennifer, it's really great having you on the podcast today. Thank you for all your good questions on the interview.
Oh, yeah, it's a pleasure to be here, Jerry. And I do want to leave the audience with 3 things that you can actually read right now to help get you up to speed on how money really works. So write these down. Number 1 is, of course, Bankruptcy of Our Nation by Jerry Robinson. You can pick that up on Amazon or go to our website, followthemoney.com / bankruptcy, and grab a copy. I highly recommend that one. Number 2 is a book called Creature from Jekyll Island. This is the one that Tom Cloud mentioned in the interview. This is by G. Edward Griffin. We've had him on our podcast before. It's a great read on just the monetary system and about how things really work as well. And then the third thing you can do literally right this second is go to followthemoney.com / petrodollar. And there you can read about some very interesting things about how specifically the U.S. dollar works. And it's an amazing read. I think it'll be really eye-opening for you.
Yeah, that's a 4-part article series that actually comes from our book, Bankruptcy of Our Nation, but it's absolutely free. It's our way of trying to educate the public on what we believe is coming. We really do believe troubled times lie ahead. It's not all fun and games, and the holes we have dug for ourselves, we're going to have to deal with. We have a lot of debt, as we've talked about on this podcast, and there are many more questions than there are answers. Very few solutions right now exist, and that's unfortunate because the bills will have to be paid, and it will probably have to happen sooner rather than later. Well, friends, that brings us to the end of our broadcast. Thank you so much for being a part of this broadcast each and every week. It's an honor and a privilege to serve you right here on Follow the Money Radio. And as always, I like to leave you with a final word, this time taken from the book of Proverbs, one of my favorite books of the Bible, chapter 13, verse 13, nice and easy to remember. This is taken from the New Living Translation. It says, "People who despise advice are asking for trouble, but those who respect a command will succeed." I really do implore you to reach out to someone, whether it's a financial advisor or even a CPA. Sit down with someone about your current financial plans. Do you have everything in order the way you would like to have it? We really don't want to despise good financial advice. We really do need to receive that. And it's not just financial advice. This verse applies to all manner of good advice. That's just something to think about. Remember, friends, when you want the truth, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.